Egg yolk, what is going on? Viewers of the tube, if you don't know by now, I'm your host Tyler, and welcome to the channel that is about as honest as George Carlin explaining boomers.
Something else I'm a little tired of hearing about. The baby boomers. Whiny, narcissistic, self-indulgent people with a simple philosophy. Give me it, it's mine! Give me that, it's mine! These people were given everything. Everything was handed to them. And they took it all. Sex, drugs, and rock and roll, and they stayed loaded for 20 years and had a free ride. But now they're staring down the barrel of middle-age burnout, and they don't like it. They don't like it, so they've turned self-righteous. And they want to make things hard on younger people. They tell them abstain from sex, say no to drugs. As for the rock and roll, they sold that for television commercials a long time ago. So they could buy pasta machines and Stairmasters and soybean futures.
Okay, boomer, you know our millennial revolution. It's time for Chico Crypto. Traditional finance, Finance 1.0, banks, mortgages, 401ks, the stock market, government bonds, ETFs, mutual funds, and more. The financial planning pyramid, they call it, and we were told since a wee one that this was the path to glory, security, that this was the path to retirement. This was the way to the American dream. But if you know your boy Chico, he has a different worldview thanks to the introduction of Bitcoin over 10 years ago. Finance 1.0 is outdated, inefficient, and designed to support those who lived in an America that did support the American dream. Baby boomers were given a golden spoon as Finance 1.0 thrived. Gen X was given a silver spoon as Finance 1.0 became corrupt. And unfortunately, my group, the Millennials, we were given a plastic spoon to play with. America's youth since the 80s have had a bad relationship with banks and Finance 1.0. Their predatory self-preserving practices have left a bad taste in the mouths of many young consumers who have historically acclimated and resigned themselves to the system as they aged. Millennials have been accused of killing almost every industry, from golf to napkins, but now we're on the cusp of the biggest breakup of all, with that of banks, 401ks, and the system that hasn't provided anything in the way of supporting our future. Luckily, a rogue persons, or a time-traveling alien released the proof-of-work Bitcoin protocol upon this world. Satoshi Nakamoto and the cypherpunks who helped his vision created their own internet astral plane roundtable, announcing to those sick with the current financial system that this, Bitcoin and crypto, is the way.
The foundlings are the future. This is the way.
This is the way. This is the way.
Yes, this is the way, and some people think that this is a video to hate on older generations of Gen Xers and baby boomers. But no, there is a good percentage of Gen Xers and boomers have realized that this is the way. Just looking at my channel stats, my highest watch age group is older than me, 35 to 44, which is a large majority Gen Xers. Only from 35 to 38 is considered a millennial in that group. And then 20% of my views come from 45 years old plus, which includes a good percentage of baby boomers. Then, if you look at some data taken in the middle of 2019 of citizens within the United States, 17% of millennials had invested in Bitcoin or crypto, while Gen Xers claimed about 9% had invested, while only just over 2% of boomers said they had invested in crypto. So even if cryptocurrency is millennial dominated, the Gen Xers and a few boomers have realized the way as well, and we need to welcome them with open arms, because the fact of the matter is, combining all age groups, over 92% of Americans still don't own any cryptocurrency, and we need all arms on deck, ready to show the world the crypto revolution. But for a revolution to officially commence, something needs to fail in the system that is being revolted against. People won't just drop banks, the stock market, and traditional finance if it keeps giving them what they need to survive. So if you've watched my channel for some time, I have been highlighting the cracks forming in the traditional financial system. Quantitative easing and a surplus of money has created low interest rates, which means the rich and elite have access to cheap capital. With that cheap capital, they have been doing what the elite do best, buying real estate, and not just houses like in the past, but land to put apartment buildings on, plus stocks. But we're gonna talk about real estate. So I'm sure all viewers who are watching this video right now know the type of apartment I'm talking about. Mid-rise buildings that look eerily all very damn similar. Luxury on the outside. But these types of apartments are called stumpies in the industry, and the current construction boom is skewed toward these big, multi-unit, boxy apartment buildings that use lightweight wood frames. Yes, they are building them because they are cheap as hell to build, because you don't need a steel frame. You can use wood, which they all do, which is attractive to these developers because stick construction, as it's called, is cheaper, quicker, and simpler to put up than concrete or steel. And mid-rise because US building codes don't allow stick buildings of more than 5 stories. So because of the access to cheap capital, the rich and elite are getting massive loans to build all of these stumpies across America. And this isn't someone in your city or the city over or the state over building these. It's usually a foreign entity. From this Bloomberg article on stumpies titled "Why America's New Apartment Buildings All Look the Same." Most multifamily developers build to sell to a real estate investment trust, an insurance company, a pension fund, or some other institutional investor. These owners aren't interested in small projects, and their bottom line focus determines not only materials, but also appearance and layout. And just look at this article from biznow.com titled "Multifamily Still the King of Investment Volume, but this year could be different." Big money is still pouring into the sector. Transactions of 100 million and above totaled 48.8 billion in 2018, a 21.3 increase over 2017. So is foreign capital. Foreign investment volumes increased by 29.3% in 2018, the report notes. Canadian investors alone deployed 9.8 billion over the year, 31.5% more than the previous high in 2015. But this article Chico likes a tad bit more. From Share States, titled "The Rise and Likely Fall of the Foreign Investor in the U.S. Multifamily Market." Real estate is not an inherently liquid asset, but is far less illiquid in the US than in other corners of the world. According to the CBRE, this is due to the inviolable degree of access to mortgage capital here. The availability of debt capital is important for investment in any commercial real estate sector. Leverage is used for most transactions, with acquisition financing usually in the 50% to 75% loan-to-value range. The article also cites the diversity of sources of multifamily real estate debt. Banks, of course, but also life insurance companies, commercial mortgage-backed securities, conduit lenders, and particularly government-sponsored enterprises, Fannie Mae, Freddie Mac, and the Federal Housing Administration. So it hasn't been American investment in America like Trump, Obama, Democrat, or Republican would like you to believe. They know a large majority of people are sheep, and when they see stuff being built on our home soil, they assume it's because America is great, while it's filling the pockets of foreign investors. Like who? Well, this commercial lending real estate report for 2019 tells us who. China number 1, Canada number 2, eh? India number 3, the UK number 4, and finally Mexico at number 5, aka cartel members needing to launder some funds. So, at the beginning of 2019, things were looking sweet for foreign buyers, like the number 1 group, China. Even the Chinese middle class were buying up homes in America. Let's see what was said in January of last year.
Not only are Chinese buyers still active in the U.S. housing market, their pool is actually expanding to the middle-income, mortgage-dependent Chinese buyer. It used to just be the wealthy all-cash. They're also expanding their sites from California to cheaper housing markets in Texas, Georgia, and Florida.
Yeah, the Chinese middle class was able to get mortgages here in the United States to buy up real estate instead of just the elite who did all cash deals. What the freak? Well, like Chico said, the cracks, they are starting to form. Well, the crack in foreign investment, aka the masquerade that America is doing okay, is about to end. By July of 2019, this is what experts were saying about foreign investment from the Chinese and beyond.
It's not only the Chinese, the British are pulling back, the Canadians are pulling back, people from Mexico also pulling back. So there are many confluence of factors. Slower economic growth in these countries, so as less income is generated, they are less capable of buying here in the US.
Yes, it started to fall because of slower economic growth in those countries. Well, by the end of the year, Chinese investment in the US real estate market nosedived by 76%. And that article only came out a couple months ago, December, before the coronavirus swept the news. So the Chinese economy is about to crumble. If you didn't know, over 760 million people have been put in some type of quarantine type procedure. That is over half of China's population and is 1 in every 10 people on this planet. Their economy is halted, and it's only going to get worse, my friends. You want some leaked videos? Chinese farmers are having to dump crops due to travel restrictions, thus they can't deliver. Health workers, even covered in gear, are falling ill, collapsing from the viral infection. And cities are already quarantined, with nobody outside, and they're having mass disinfection operations in attempts to stop the virus. I repeat, like I was saying over 2 weeks ago, this is not your common flu. This is something very dangerous for not only global health, but finance 1.0, as China has been the beating heart of consumerism for the past 40 years, and for the past 10 years has been artificially propping up the US economy. Last week I posted a video getting into the deals of supply chains, especially Apple's. I said this in the beginning of the episode.
And those Apple keyboards are horrendous.
PC Master Race, you know how we short Apple. It's time for Chico Crypto. Short Apple? What are you talking about? That is ridiculous. Shorting Apple, you will always lose. Well, Mr. Bale, what do you think?
Based on prevailing sentiment of the market, banks, and popular culture, yes, it's a foolish investment, but everyone's wrong. That's a good one.
Yeah, I thought everyone was wrong after the dead cat bounce of the entire market, including Apple, and it looks like I may have been right. A short of Apple was a great call. Yesterday, Apple had 45 billion wiped out after warning that coronavirus will put revenues below forecast. And like I predicted, a single red candle down was on the horizon for Apple stock. Yeah, it's going to get much worse than that. Just peeking at the Dow Jones since the peak of last week's dead cat bounce, the Dow has lost nearly 400 points. The ripple effects of the virus are going to hit the shores of the US, and there is no stopping it. And the Department of Defense, DoD, and the military branches of the United States are in preparation mode for a pandemic that will sweep our shores. This information was just declassified by the Navy, and it has a bunch of military jargon. But what is important is this. Ref A, OP Plan, Northcom, DoD, GCP, PI, and ID 355113. And this Military Times article explains what this is very well. An executive order issued by the Joint Staff and approved by Defense Secretary Mark Esper this month directed Northern Command and Geographic Combatant Commanders to initiate pandemic plans, which include ordering commanders to prepare for widespread outbreaks and confining service members with a history of travel to China. The Navy and Marine Corps messages issued Tuesday and Wednesday respectively reference an executive order directing U.S. Northern Command to implement the Department of Defense Global Campaign Plan for Pandemic Influenza and Infectious Diseases 355113. So what in the bejesus is that? Well, the campaign plan is the Department of Defense's implementation plan for pandemic influenza, created in 2006 after the bird flu pandemic situation. From their own documentation, a pandemic in the United States could result in 20 to 35% of the population becoming ill, 3% being hospitalized, and a fatality rate of 1%. A vaccine will not be available for distribution for a minimum of 6 to 9 months after the clinical confirmation of sustained human-to-human pandemic influenza transmission. And even in the plan, they are ready for a complete collapse of the government. Annex D, continuity of operations, continuity of government. An influenza pandemic may degrade seriously the capability of DoD to continue its mission, essential functions, and services due to significant and sustained absenteeism. This annex provides substantive guidance on continuity of operations and continuity of government, including a reconstitution. Reconstitution embodies the ability of an organization to recover from a catastrophic event and consolidate the necessary resources that allow it to return to a fully functional entity of the federal government. The objective during the recovery and reconstitution phase during a pandemic is to expedite the return of normal services to the nation. So we are seeing the reality from Twitter, what is going on in China, and don't think for 1 second it cannot happen here. Traditional finance 1.0, which relies on the physical world oh so much, is in for a world of hurt, unless this is all a bunch of hogwash. My plan as a millennial is to accumulate as much crypto as possible and stay away from the assets that the elite have manipulated to shreds. If you are with me, stay with me. I will be producing content till the very end. Cheers. I'll see you next time.